Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, 24th day of April, 2017, and this is the Daily Report for Gold and Silver. Tremendous weakness in the precious metals across the board. Dynamic sell-off, although much of those earlier morning losses have been trimmed. We still have gold trading off almost $12. When we look at gold futures, $11.90. Almost a full percentage point drawdown to close at 1277.20. Take a look at the low though, 1266 with a high of 1280. So we've seen a dynamic range. We have seen a pretty substantial recovery from the lows, but still closing off, as I said, roughly 1% on the day. Over to spot gold, $12.75 and change, putting it off about $8.50 on the day. Now, when we look at silver, we do have silver trading higher, nominally higher, but higher nonetheless at $17.89.5. This, of course, due to the industrial component of silver with a dynamic and tremendous rally in global equities this morning following election results from Sunday's election, in which both candidates will go into a round two, so to speak, on May 7th. And the candidate who's more of a globalist seems to have a slight advantage over Le Pen. Silver futures, as I said, trading up about 4 cents on the day, $17.90 right now. Low on the day, $17.55 with a high of $17.91. As you can see, we're only 1 cent off of the high today. And then spot, of course, is trading at $17.91. Considering the size of this morning's sell-off in gold pricing and the subsequent recovery, gold was pretty impressive as far as I'm concerned. We had a tremendous sell-off. Market closed at $1277.10, off about $12 on the day. But if you look at the low came in at approximately $12.66. And that to me is pretty critical, because what it really shows us is that this market broke hard really below our current resistance level, which sits at 1278. And 1278 is a 61% retracement. It is a 61% retracement of a larger move in the market. And the fact that it closed just below that price point says that there was good support, which of course came into the market. The other area that we certainly want to focus on is our 200-day moving average. That's this dashed red line. As we draw it across current pricing, we can see that it does really coincide with a top area here, as well as showing us resistance here. So the fact of the matter is if the market continues under pressure, this is the point that we would look at for some potential support. Now, we had a percentage, roughly half of our subscribers take our stop recommendation. We did get stopped out with a small profit. Market was roughly at 1278. Market is now at 1277.30. So we certainly might get the opportunity to re-enter the market with a nice dip. I had considered it this morning. However, I wanted to really let the dust settle and see where this new fundamental data takes the market over the next couple of trading days. And for those that were still long in the market, I did ask you to send me emails, and I appreciate that. I neglected to ask you where your current stop was at. Assuming your stop was not moved and the original stop that I had placed was just below 1260, had you had left it there, you will still be long the market from our initial entry point. The industrial component of silver giveth, and the industrial component of silver taketh away. In this case, it gave. We had precious metals under pressure, specifically gold. Silver was trading under pressure, considering that it traded to a low of 55. You can see that by virtue of this long tail here. Both gold and silver closed with tremendous tails in the market. We did see prices recover, closing up about 4.5 cents on the day, a gain of about 0.25%, and we certainly have, in terms of a candlestick pattern or identification, we certainly can say that there is a hammer in the market, because when we look at the umbrella group of candles, and there's 4 of them, on the bottom you get an inverted shooting star or a hammer, on the top is a shooting star or a hangman, and it is the same candle. Color doesn't matter. It's all about body size and relative size of the tail below the body itself. And the simple definition of a hammer is after a defined downtrend. We certainly meet that criteria. You have a small bodied candle. It can be either red or green. As I said, color doesn't matter, but the distinguishing factor is the tail, which must be at least 3 times the size of the real body to qualify as a hammer. At the same time, we can see that it closed at but not above the 200-day moving average. Here's our 50-day and here's our 200. Of course, we closed below the 200-day moving average on Friday. We also identified a engulfing bearish pattern on our weekly charts on Friday. However, today's recovery could in fact be signaling some support coming into the market. In other markets that we follow, a equity rally which began in Europe, taking European equities up to a 17-month high, carried over, spilled over into the United States. We've got the Dow Jones Industrial Average closing up over a full percent, gaining 216 points, closing at 20,763. A very, very impressive rally. Same thing with the Standard & Poor's, up 25 points, gaining over 1% at 2374. However, both of those indexes dwarf in comparison when we look at not only the net change of the NASDAQ, but where it closed. Because when we look at the NASDAQ composite, up about 1.25%, up 73 points at 59.84. But what is most impressive is 59.84 is a new record close for the NASDAQ composite. Now, as we talked about with the precious metals, one of the things that we noticed was that the dollar just got battered today, down about a full percent. Of course, euro-dollar strength contributed dynamically to the majority of these losses, but we're down now below 99 at 98.89, down 98 points or 99 points, which is a full percentage drawdown on the day. And even with that weaker US dollar, gold still closed dynamically lower on the day. And then lastly, want to take a look at crude oil, which did in fact trade lower today, losing not quite a full percentage point, but well below $50 a barrel now at 49.20. One of the key markets to follow and to see activity today is the U.S. dollar, closing off about a full percentage point below 99 at 98.92. More importantly, on a technical basis, when we look at our current dollar chart, I have simply put a 200-day moving average in here. We can see that back in October of 2016 is when we had this major flush and this move to the upside, coming in through the election of last year and then topping out just above 103, just below 104 in the dollar index. Since that point in time, it has traded under pressure, but in all of the pressure that it's traded to, this dip, this rally, the subsequent correction, this last rally, has all maintained a price point above the 200-day moving average. And so that lended some real support to the bullish faction in terms of the dollar index. But today, the same cannot be said. This is a major break on a technical basis below the U.S. dollar 200-day moving average. I would expect lower pricing. In terms of support, we have a little bit. We can see this one top here, but that has been absolutely breached. The next real major level of support on a technical basis is not really going to come in till about 97.50. And traders, we are looking at an extremely long-term chart of the NASDAQ composite. This, of course, is a monthly chart. You can see it by virtue of going back to 2007. In terms of the months itself, today's close took us to a new closing record high. Even on the monthly candle, you can see that in that there is no upper tail. We're right at the top end of the spectrum here. We have seen new record highs on a consistent basis, month in, month out, for quite some time. And in terms of time parameter, we're looking at probably November of last year, in which it had been trading sideways for quite some time through the year of, really through the end of 2014 through 2015, and then really burst into activity in 2017, following, of course, the election of President Trump. And this market has been the most dynamic in terms of percentage gains of all of the different composites. And traders, lastly, I do want to take a quick look at crude oil. Crude oil plunging today below $50 a barrel at $49.20. We know that in recent activity it's been as low as $47, so that's not anything that's extreme. What is interesting, though, is the fact that for the better part of this year, in fact, this entire year, going back, if this is December 2017, we have been trading sideways pretty much in oil, and we have been trading sideways after a tremendous spike back in November, December of last year. We had one dynamic correction taking us to 47 and also breaking below the 200-day moving average, and that was followed by a subsequent rally with a lower high than the previous high, and therefore I believe if we have a sizable break below the 200-day moving average, I think we might in fact take out 47 and move to a new yearly low. So traders, if you recall from the Weekend Review Friday show, we talked about positions that we had in gold, the fact that a good percentage of our subscriber base did take our recommended stop, which was moved to about 78. That's where we exited the trade. Market is trading at 1277, so roughly in this area, but the low today was 1266. What we said on Friday was that we would look for some kind of a strategic dip to get back into the market, given that the market scenario we were looking at had some bullish tendencies or a reversal in play if in fact it came under pressure. Well, it has come under pressure, and so my sense is it will provide us with the opportunity to reposition ourselves from the long side. I don't believe the rally in gold is over. I simply believe it's in a corrective stage, and the key question right now is whether we're witnessing a correction or simply a short blip with a very, very short sell-off before returning into rally mode. That's something that we won't know until more data and time has gone by. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.